Greetings everyone and welcome back. Today we are going to talk about why everyone is saying a recession is coming. The current economic conditions are causing ripples of uncertainty and concern across the globe. From soaring inflation to supply chain disruptions, various factors are converging to create a perfect storm that could impact the future trajectory of the economy. In this video, we explore the potential consequences of these economic challenges and their implications for the coming months and years. Inflation has reached a 40-year high, with the Consumer Price Index, CPI, surging by 8.6% in May 2022 compared to the previous year. The relentless rise in prices is straining household budgets, eroding purchasing power, and potentially hindering economic growth. To curb inflation, the Federal Reserve has begun raising interest rates. However, this move may have unintended consequences. The increased cost of borrowing for businesses could slow down investment and hiring, potentially dampening economic growth. Global supply chain disruptions persist. The COVID-19 pandemic and the war in Ukraine have wreaked havoc on global supply chains, leading to higher prices for goods and services. The continued disruption could weigh on economic growth, causing further uncertainty in the market. The war in Ukraine and its global economic impact. The ongoing war in Ukraine is causing economic pain not only for Ukraine and Russia but also for other nations worldwide. The geopolitical tensions and economic fallout could result in slower global economic growth, further impacting the fragile state of the economy. Labor market strength and eroding purchasing power. While the labor market remains robust with a historically low unemployment rate, workers are facing a significant challenge. Wages are rising at a slower pace than inflation, eroding their purchasing power and potentially affecting consumer spending. Consumer spending struggles amid rising costs and interest rates. Consumer spending, a vital driver of economic growth, is showing signs of slowing down. The combination of escalating prices and rising interest rates make it harder for consumers to maintain their spending levels, posing a potential economic risk. Cooling housing market and economic implications. After a period of rapid growth, the housing market is beginning to cool off. A decline in home prices could negatively affect consumer confidence and spending, as well as impact related sectors such as construction and real estate. Volatility in the stock market and investor confidence. Recent months have witnessed a rollercoaster ride in the stock market, fueling concerns of an impending correction. A market downturn could erode investor confidence, potentially leading to slower economic growth as businesses become cautious about investments. The global economy at a crossroads. The global economy faces a confluence of challenges, including the war in Ukraine, rising inflation, and supply chain disruptions. These factors could culminate in slower global economic growth, which would have reverberating effects on the United States and the rest of the world. The lingering COVID-19 pandemic. The ongoing threat of the COVID-19 pandemic remains a wildcard. If the situation worsens, economic activity could decline, and the labor market might be further impacted. Government policies and their influence. Government policies hold significant sway over the economy. Fiscal stimulus measures could boost economic growth, while tax hikes or spending cuts may have the opposite effect. Technological change and its impact. The ever-evolving landscape of technological change can shape the economy in various ways. Proper management and adaptation to technological advancements will be crucial to ensuring a positive impact on economic growth. The future of the economy appears uncertain and potentially challenging due to a combination of factors such as high inflation, interest rate hikes, global disruptions, and geopolitical tensions. As we navigate these stormy waters, policymakers, businesses, and individuals need to remain vigilant and adapt to the changing economic landscape. Preparedness, resilience, and effective economic management will be key in weathering these challenges and charting a course towards stability and growth. However, despite factors such as high inflation, interest rate hikes, global disruptions, geopolitical tensions, and other potential risks, there are reasons to believe that the economy may be able to withstand these headwinds, thus cancelling the recession. Economic adaptability. One of the primary reasons a recession may be avoided is the economy's ability to adapt and evolve. Throughout history, economies have demonstrated a remarkable capacity to adjust to changing circumstances. While current challenges pose hurdles, they also create opportunities for innovation and growth in sectors such as technology, renewable energy, and healthcare. Proactive measures. Central banks and governments have shown a proactive stance in addressing economic challenges. The Federal Reserve's decision to raise interest rates aims to curb inflation and maintain a balanced economy. Likewise, governments have implemented policies to support businesses, stimulate investment, and mitigate the impact of disruptions. These measures can help stabilize the economy and steer it away from a recessionary path. Consumer resilience. Despite rising prices and potential interest rate hikes, consumer spending has remained relatively strong. The labor market, with its historically low unemployment rate, continues to provide stability, supporting consumer confidence and purchasing power. As long as consumers maintain their spending habits, it can act as a cushion against a significant economic downturn. International cooperation. The interconnectedness of the global economy has led to increased cooperation among nations in times of crisis. The war in Ukraine and other geopolitical tensions, while posing risks, have also prompted diplomatic efforts to find peaceful resolutions. Collaborative actions aimed at stabilizing the situation can help prevent a broader economic fallout and minimize the chances of a recession. Technological advancements. Technological progress has the potential to transform economies and drive growth. From automation and artificial intelligence to advancements in renewable energy and infrastructure, innovation can boost productivity and create new job opportunities. Smartly harnessing technological advancements can help counterbalance economic challenges and stimulate economic growth. Governments can adjust policies in response to changing economic conditions. As challenges arise, policymakers can adapt fiscal and monetary measures to support the economy. This flexibility allows for timely interventions and mitigates the likelihood of a full-fledged recession. History has shown that economies are resilient and have the capacity to recover from challenging periods. Past recessions have led to valuable lessons in economic management and risk mitigation. Policymakers and economists have learned from these experiences, allowing for better preparedness and response to potential downturns. While numerous economic challenges loom on the horizon, the possibility of a recession should not be taken as an inevitability. The economy has exhibited resilience, adaptability, and proactive measures that can help it navigate through these challenges. Consumer spending, international cooperation, technological advancements, policy flexibility, and lessons from the past all contribute to a more optimistic outlook. However, vigilance and ongoing efforts to address the root causes of potential risks remain crucial. By fostering a favorable environment for growth, innovation, and stability, the economy can maintain its momentum and potentially avoid a recessionary downturn. So, there you have it. Those are my reasons why I think the recession may not happen. Of course, it's impossible to say for sure what the future holds. But I'm optimistic that the economy will be able to weather the current challenges and avoid a recession. Thanks for watching. If you enjoyed this video, please like and subscribe to my channel. And if you have any questions, leave them in the comments below. I'll see you next time.